is something that, once again, could have been preventable because, and I, just a personal, brain fart on my end, which was there was some news that was coming out that Friday or this past Friday about the Great Britain pound, right? It was GDP report was coming out, and then also business investing was coming out, right? The GDP came out, it was on track, right? It met expectations. The business investing part, when it came out, it did not meet expectations. In fact, instead of business investing, expanding, it actually started to contract. And I believe this is the second time this year it started to contract. I think it started to contract in the first quarter. I think it met or expanded in the second, and then here in third it started contracting again. So with that being said, it was a cause for caution within the Great Britain pound, right? So anyway, when the information came out, of course, there was a lot of excitement, and that's why you see this big price swing here. Boom, boom. And that actually triggered my entry order into this pair, right? And so that was about a 48 pip price swing. And if you notice, right, before then on the 3 o'clock, 2 o'clock, 1 o'clock, all these right here, not much price movement at all, right? We just had this one nice little move down here, and this is what, about 3 o'clock in the afternoon or so, the day before on Thursday, right? But other than that, it had been pretty small, pretty confined, right? So there was a lot of energy pent up into the market because there was anticipation as far as something was going to happen. No one really knew what was going to happen or which way it was going to go, but kind of knew something was going to go, right? 3 a.m. to 4 a.m. Folks came into work, came into the trading desk, started putting on their positions. We got some sell off. Actual news came out, right? Market started whipsawing up and down, up and down. Market then found some direction, started going down. Nonetheless, though, never hit my tipping point, never hit my desired goal, right? Eventually, market made a U-turn, went back up, and it hit my stop loss, right? And I was out of the trade, right? Out of the trade, out of $415.26, right? So you say, well, what could you have done better? Well, one, even though we trade technical analysis and we go in and we analyze the charts and we look at price actions and we look at indicators and just based off of those alone, we're trying to determine the direction of the market. It's still good to be familiarized with the fundamental side of things, right? Now, I know a lot of people don't like kind of delving into the fundamental side, and the reason being is because you feel like you almost got to be an economist to be able to do it, right? And you start looking at all these different numbers and the different reports that come through, but it's good to familiarize yourself with them, if nothing more than just to know when those reports and when those numbers are going to be coming out, right? And also to know which ones are important to the currency pair that you're trading, right? Because if I had factored that in, if I had taken that into account, then I would have known to either put my stops a little bit wider and maybe to bring in my take profit a little bit more, or I would have just stayed out of the market altogether and just waited for another day to trade when it wasn't as turbulent as it was on Friday, right? But needless to say, I went in, and the good thing that really protected me was the fact that I had my stop losses in, so I already knew how much I was willing to lose before I even placed the trade. I had an ideal market direction. Another thing I could have done to prevent this loss is just manually kept my hands on the wheel throughout the trade, and that would have just been that, hey, once this market, once the price drops into a profit, immediately bring down my stop loss, so a way to make it into a risk-free trade, right? But I didn't do either of those. I went out and started working out right after I got off. Right after I put these trades in and got off the live stream. So for my reward for working out right after I got the live stream. So actively managing the account for, instead of making sure that I check the news feeds and make sure there are the economic calendar and make sure that there wasn't any type of major news releases coming out that day. My reward for failing to do the things that I know that I should do, right, is being negative $415. Now, the good thing, the saving grace about all this is that I, just happened to be lucky enough to, when I was going through and was looking at these different setups and potential trades, I had identified another trade alongside of the Great Britain pound Swiss franc. And that trade was Great Britain pound Canadian dollar, right? Lucky me. With this one right here, we said our entry was going to be at 1.69853, which is right here where this black arrow is at, right? We said our stop loss was going to put it at 1.70367, which is right here where this red arrow is at. And then we said the take profit was going to be at 1.69394, which is right here where this green arrow, this green line is at. Okay. So let's walk through this trade, because this trade actually went right. Put the trade in, same thing happened. As you can see, all these candlesticks beforehand, just really not nothing here, and just really kind of tight consolidation, not much happening. Around 2 o'clock, 3 o'clock, started to get a little bit of movement going downwards. We're looking at the 20 period moving average, simple moving average line, and we're well under there. So this is looking like a sell type setup for us. We get in, the news come out about the Great Britain pound, about the business investing. We get a spike lower, and that spike lower is what put us into this trade. Immediately after that spike, we started to get a U-turn. It actually started to go back up again, right? And as it started to go back up again, it was closely approaching, our stop loss. But just so happened, because we were trading against the Canadian dollar, the economic news that came out in Britain, the economic news that came out, the weakness in the Great Britain pound, and the fact that there was expectations for the Canadian dollar, because there was some information that's going to be coming out on that Friday morning on the American time around, I think it was 8:30, 9 o'clock, regarding the Canadian dollar, which gave strength to that currency, right? Which allowed it to go ahead and to continue to pull down the Great Britain pound Canadian dollar pair, right? Which is good for us, because guess what? Yeah, right there, 8 o'clock, when that news came out, we hit, right? And then there was continuation all the way down up until the close on Friday, right? And as you can see, there's a gap right now, right, from Friday's close to Sunday's open, which I don't, depending on how savvy of a trader you are, this is an oldie but goodie tip, when they say when you see a gap like this, a window, right, that is gonna close. At some point in time, this gap has got to close. So that means at some point in time, price action is gonna go back up and at least retrace to this point, right? Not saying that it's gonna be a full-blown U-turn, it's gonna go back the opposite direction, but I am saying though, at some point in time, that this window has got to close, and it will. Maybe it'll be today, maybe tomorrow, next week, I don't know, but it will close, right? So that's something to look out for too. And I think you can also see that same gap on some additional pairs of the Great Britain pound pairs, okay? So once again, just to kind of retract what went right here, the fact that we didn't use a market order, right? I'm looking and getting correspondence from a lot of different folks, asking me about what are they doing right, what are they doing wrong, and I'm gonna tell you, a lot of times it's just the fact that your wins and losses can always be tracked back to something simple, something very basic, right? Do not get away from the basics. I don't care how many years you've been trading, I don't care how long you've been in, I don't care how much money you made or how much money you think you're gonna make. Don't ever get away from the basics, because in the basics is where everything lies, man. That's the key to everything, right? And a lot of times your losses can just be from something simple, right? It's something simple that you need to tweak to get you over from being a loser at Forex or Bitcoin traded to a winner, right? Trust me, if I can do it, anybody can do it. Okay, I was the case study textbook worst trader on the freaking planet, right? I couldn't, turn a profit for nothing. Even if you set it up, put everything into place, and just let me hit the the buy button, I would still wind up losing money. Just the absolute worst trader on the planet. But you know what though? After taking time going in and looking at what I was doing right, looking at what I was doing wrong, going back and analyzing my losses, not just basking in the glory of my wins, right? Because anybody can win, anybody can get it right. But going back and look at the losses is where you learn. That's where that's where the improvement comes from, right? So if you just take the time, go back. Don't try to forget about your losses, but don't look at them and be depressed about them. Look at them, take an academic look at them. Look at them from an academic standpoint and say, analyze those things and look at and say, what did I do wrong? What could I have done better, right? And, one of the basic things I see a lot of people do, is just not really knowing where to get in. They turn on the computer monitor and they think that, okay, now's the perfect time to buy. It's at a market low. Or, hey, it's the perfect time to sell. It's at a market high. But you got to ask yourself, is it really at a market high? Is it really at a market low? I mean, are you really that lucky that every time you cut your monitor on and you fire up the computer, that you're at a high or a low point? You're at a dip? I mean, come on, really? Probably not. Probably what it is that you just have directional bias. It's something they call directional bias, that you're just seeing what you want to see, right? And you're putting your trades on based off of you seeing what you want to see and what you want to believe, right? And then what happens is you get into the trade goes against you, and because you're so locked into your directional bias that you don't want to get out. So the stop loss that you had originally put in place to get you out if you went to the wrong direction, you start to move it back, because you feel like, oh, well, I just need a little bit of time for this thing to take off. I just need a little bit of room for it to breathe. You don't need any room for it to breathe. What you need to do is let yourself breathe and get out of that bad position. Okay? Take your losses like a man or a woman, right? And just take them. Take them like an adult. I took my 415. It was okay, right? But guess what? I took the 415 and I still had, I got 426. That was profitable. So I still came out on top, right? Came out on top on that one, and I came out on top of the Great Britain pound US dollar the day before. So what I'm saying is this. I'm saying all that to say this, is that there's money to be made trading, right? But where the losses come from is from individuals just making bad decisions and then refusing to own up to those decisions that they made, right? Stop losses are there for a reason, to protect you, right? Had I not had a stop loss over here, let's see this. Had I not had a stop loss over here, I'd still be in a losing trade and would still be continuing to lose right now, hoping that this thing would come back around, right? So I would have took a $415 loss and probably turned it into, probably like a $500 or $600 loss by now. So that's another $200 I would have lost, right? But who knows how far this thing could go up? Because now, right, the candlestick is above the 20 moving average. So now I'm thinking that, hey, this might be a buy, right? So once again, it comes down to having discipline, it comes down to having a game plan, and come down to just owning up to your losses. It's okay to lose, and it's okay to lose in this game, man. Lose. It's okay. It's okay to have losses, right? The key is, though, is to have enough success that when you have the losses, that it's not going to take you out of the game, right? And the only way that's going to be possible is you got to use your stop losses, and you got to be smart about how you play in the game, okay? So let's look back to, real briefly, I'm going to look at that first one we did, which was the Great Britain pound US dollar. And then what we're going to do is let's look at a couple of currency pairs here. Let's see how it plays out. And also, too, guys, do not forget the software that we're using here, the charting software that we're using here is Smart Trader, right? If you have not downloaded that software yet, please go to our link below our channel and download that software. And just a FYI, full disclosure here, we are an affiliate of this charting software, right? So that means that we will get paid, a little small something, right? If you choose to buy the software in the future, purchase software in the future. I will tell you this though, just from a personal standpoint, right? I would recommend this to you even if I wasn't getting paid for it, right? And the reason being is because this software is phenomenal, it's really good, and it really helps make trading a whole lot easier. So whether you are brand new to trading and you just kind of have a difficult time sometimes trying to figure out where how you should draw your trend lines, where your support and resistance are at, or if you're someone who's a pro and you've been doing it your whole life or whatever, this right here makes it easier, right? I always tell people if you got a job to do, always make sure you got the right tools to do the job, right? You won't want to go to surgery. You want somebody to operate on you if you had to have surgery with a butter knife, right? Or a plastic fork. No, you want them to have a scalpel, right? And the tongs and all the other good stuff that you're supposed to have when you're doing surgery, right? If I tell you to go outside and dig a shovel, you won't want to go out there. Dig a hole. You won't want to go out there with a spoon. Which one would you rather use, a spoon, a shovel, or a backhoe, right? You probably want to use the backhoe or what they call it, the excavator, right? Because it makes the job easier, makes it more efficient. This software here, it does the same thing for traders, right? It makes our job easier. It makes it more efficient for us to trade. There's also a social network that's built into this. So that way, once we get in and we start trading on the live accounts, you guys can send me copies of your charts, send me copies of what you're trading. I can look at it with you. We can talk back and forth about it, which is really good and really ideal, especially if you want to start trying to make money off this stuff and not just use a demo account and play around with it, okay? All right, so yeah, here's the U.S. dollar trade, and I took all my notes off of this one right here. But one of the things I would just want to look at here, and I think we got into this one was on that. Ooh, did we sold? And so that was on the Tuesday or the Wednesday. Thursday. Yeah, okay, so that's what it was. So we sold on that Tuesday. Yeah, because we never did hit our full potential. We wind up getting out part way through, and then on that Wednesday, and then we didn't get back in again until the what was it on Thursday? Yeah, that's what it was. Yeah, we didn't want to get back in again until later that week. But the point I want to kind of make about the trade with the Great Britain Pound is, if you remember, when I went in and traded that account, that one right there, even though we made profit on that one is more of something as a not to do, right? Because that one we really leverage it high, right? And I went and I leveraged it high just because I wanted to kind of build some cushion in our capital for a little bit, and then B, just want to kind of talk to you about it. Some of the stuff I do, the way I kind of train or kind of teach or try to kind of guide people, is showing you, making going in and doing certain things on purpose, just so that way you can get an idea and you kind of look at it. Because I think that a lot of mistakes that a lot of people are making is, along with the just jumping into a trade with a market orders, when they open up their computer screen, is also over leveraging their accounts because they're trying to make a significant amount of money in a short period of time, right? And the problem is that, yeah, you can do that. You see them on the YouTube and everything all the time. People made all this money, and or they on Instagram talking about, hey, I just made $20,000 off of a trade and all that stuff. But think about it for a second, man. Just think about it for a second. Don't get caught up in all that greed, right? I mean, $20,000 or 15,000, whatever. Yeah, that's nice. That's great. Who wouldn't want to just make that type of money every day? But the question you got to ask yourself is, do you really need that type of money every day? Do you really need to take that type of risk to make that type of money every day? Because trading is like a pendulum, man. You ever seen a little pendulum ball where it swing like boop, 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 go back and forth, right? Right. That's what trading is. Because what happens is, just as quick as you can make money on one side, right, you can lose that same amount or more on the opposite side, right? And that's why it's so important that when you get into trading, you have a plan. Right? I think a lot of people are just kind of motivated by greed, or they're fearful, or they're greedy and fearful. I don't know. And so what happens is they take on more risk than they should, right? More risk than you have to. Don't let that be you. There's no need for you to have to go stand in the cheese line someplace and lose everything you got because of a bad trade, right? Take your time. Think about what you're doing before you do it. Think about it, man. If you got to get up and walk outside, smoke a cigarette, take a break, whatever it is you got to do to relax, whatever you got to do to get you in that right mind state where you're not just thinking with emotions. Because when you start making an emotional decision about a trade, I'm going to tell you something. 9 times out of 10, it's going to be the worst decision you make. Emotions cannot come into play in this type business, right? You have to check emotions at the door. You have to check your ego at the door. So if you're losing, losing position, stop adjusting that stop loss to keep taking more of a loss, right? Yeah, it's gonna come back around, and it'll probably come back around as soon as you close out. We know that. That's what always happens, right? But let it, right? Live the trade another day. The problem is you're putting too much on you're doing all or nothing, putting too much on one thing. And when you do that, what's happening is, it's not coming through for you, and then you're losing money. And not only are you losing money, you're losing time. Because guess what? When you start losing that money, now all of a sudden you got to go probably work a 9 to 5 someplace to replace that money you lost, so that way you can trade again. When if you just be patient, you'll be okay. Look, this 426 there, the 415 that we was trying to get here. I mean, these things right here. I mean, yeah, it was leverage, but we were talking about maybe what, $10 a pip, right? Standard lot, right? Trade a standard lot. Maybe you're gonna put in about $2,500, maybe, right? I mean, I'm pretty sure some places where you can put in less, but here's the other thing too. Do you really want to put in less and trade, bigger lots with less capital? No. And the reason being is because if you do, and the market moves against you, right, your money's going to be wiped out that much quicker. And then what happens is, because you got less capital inside of your account, right, they're going to lower your lot size as far as what you can trade, right? So now instead of trading $10, a pip, they might drop it down to 4 or 5. So now it's going to take you twice as long to get back the money that you already lost, right? And psychologically, that does a lot to a trader, right? And I don't mean it does a lot to him in a good way. I mean it does a lot to him in a bad way, right? Because once you get down, it's hard to kind of get yourself back up sometimes. I know, I've been there, I've done it. I've been there, I've been exactly where you've been at. I mean, all the emotions, everything you feel, I felt that, okay? So I guess the message that I'm preaching to you today, or what I'm trying to talk to you today, the point I'm trying to get across to you is this, is that be smart about your trades, right? Be smarter. And if you haven't had an opportunity yet, I mean, I don't know what your situation is. I don't know how much education you have about trading or what you've done in the past when it comes down to trading. But listen, I offer a free website. I mean, not free website. I offer a free course on our website, right? It's no obligation. It's nothing. You don't have to, you don't have to pay me for it. Just go there, put your information in the system, download the course. Yeah, it's gonna teach you the basics, right? I'm gonna talk to you about the basics, okay? And if you still feel like after you taking that, and you still feel like, well, I still can't seem to get it, and don't worry about it, man. It takes time to get this stuff, okay? And that's why we're doing these live trades right here, to help you, because I want to see you win, right? I want to see you do good for yourself, right? I think all of us share some common goals, which is, we want to be healthy, we want to have a nice, productive life. We want to, see good things happen for our kids and for our family, right? And when it comes down to stuff like this right here, Forex trading, we want to be profitable. We want to win, right? And I'm gonna tell you something. Any of you guys who tuned into me now, right, at 3 o'clock in the morning, right? I know for a fact that you guys are dedicated, all right? Because guess what? People that's not dedicated, especially over here in the U.S. Now, if you're over in Europe someplace, then that's a little bit easier because this is around the time that you go to work anyway, right? But if you're over here in the U.S., we're about 5 hours behind you, depending on, what state you're in. And I'm gonna tell you something. To be up at 3 o'clock in the morning, to be sitting here trying to understand how to trade Forex, that shows nothing but pure dedication. And that lets me know that you got what it takes mentally wise, to be able to do this and be successful with it. The problem is you just haven't figured out yet what it is you're really doing wrong. And it could just be something that's simple from a discipline standpoint that you just need to tweak, right? Get it straight. And then that way you're going to be on the road to having success and being consistent and being successful in trading Forex. And I want to see that for you because, this is something that you can do. Like I said, if I can do it, any and everybody out there can do it. Hell, a chimp can do it if I can do it. I mean, so it ain't that much, right? All right, guys. So anyway, that's enough of my soapbox ranting and raving. So where was I going? Oh, yeah. So anyway, let's start looking at some of these pairs now to really kind of figure out what we're going to be doing here at the 4 o'clock hour. What trade we're going to make. And let's kind of walk through, which one we're going to look at trading and why. Remember, we got about, 6 pairs that we look at really trying to trade during the London Open, right? And the reason being is because, London is the financial capital of the world. And there's a lot of money, trillions of dollars is pouring through there at this exact moment right now. People are gearing up for the trading week. And so it is in our best interest that if there's a lot of money going into a currency pair and it's going to push that direction of that currency pair either up or down, we need to trade with that momentum and not against it, right? Because remember, it's about probability, right? At the end of the day, nobody knows what the market is going to do. Nobody knows if the market is going to go up. Nobody knows if the market is going to go down, right? In fact, the market, if you think about it, can really only go 3 ways. It can go up, down, sideways. In actuality, it moves, with a variation of 2 out of that 3. So what I mean by that is either moving up and to the side, like here, right? Up, down, up, down, up, down, up and to the side, or it's either moving down and to the side, right? Down, up, down, up, down, up, right? So it's not moving counterclockwise, it's not moving backwards, none of that nonsense, right? It's just moving in 3 directions, really, 2 of those directions at the same time. So as a trader, all we really need to do is just to figure out what direction it's moving, right? Up to the side or down to the side, right? And sometimes it does kind of go straight up, but not exactly all the way up for an extended period of time. But we just need to figure out which direction it's moving, and then we need to figure out, okay, where do we get in at, right? When it's moving in that direction, where do we get off, you know what I'm saying, before it starts moving in the opposite direction, right? And where do we get out of this thing, just in case if we happen to get in at the exact wrong time, and all of a sudden it's going to start moving back in the opposite direction. If we can figure those things out, it's done. And that's simple. Just takes a little bit of discipline, a little bit of practice. All right. All right. So anyway, so we're looking here. This is Great Britain pound, U.S. dollar, and let's kind of, thinking back to our previous lesson about the economic calendar or anything's on the that's supposed to be coming out. There are some things that's going to be coming out Monday morning for the Great Britain pound and for the U.S. dollar. I don't think it's going to be anything too big though. I mean, there's some somewhat big announcements, but nothing monumental. Now, of course, unless something happens overnight. Oh, one thing I will make a note of and tell you about is that I saw somewhere that that Canada and the U.S. has agreed on NAFTA. So with that being said, then you can definitely start to think about some strong price action with the Canadian dollar and the U.S. dollar, right? So that may give some strength to the U.S. dollar here. Looking at this right now, though, it looks like that for whatever reason, right, that and this could be based off of the economic information that's being released as we speak for the Great Britain pound, that there's money pouring into that particular currency, right? And as of right now, it looks like a strong candidate to potentially buy, especially with this currency pair here, right? Let's look at it from the daily chart. This right here, we're looking at the hour chart. I like to trade out the hour chart. The reason being is because if you're not trading with a large amount, and especially if you're looking for these moves, you definitely want to trade on a smaller account, right? Trade on a larger amount, and you got more time for the trade to kind of develop. By all means, trade on a larger time frame. You get more pips, per trade, but it also takes a little bit more time for it to develop. Okay. So if we look here, this right here is on a daily chart. It's below the 20-day period moving average. It hasn't touched this trend line yet, but it definitely looks like it could be making its way to it. So this right here, and this is a good example, actually, of why a lot of traders kind of get in trouble when they trade, right? Because when you trade, you should be looking for the direction, like I said, of the currency pair, right? And if you're looking for your direction on the wrong time frame, and then you trade on another time frame that doesn't match up good with the time frame that you got your direction off of, then what happens is, yeah, you might have been right about the direction overall that it was going to go, but for the direction that your actual trade went goes in the opposite of what you had anticipated, and so then you come back and you're frustrated, only to see that the currency pair eventually goes in the direction that you had originally forecast. Of course, after you've been wiped out. Once again, if you're having those type of problems, that's something that's correctable. That's something that we can clear up for you. And here's the other thing too. Even if you don't want to work with me, find you a good mentor, right? Find you somebody that's been in the business, that's proven themselves, that's making money on a consistent basis, and that can actually help you. Because at the end of the day, because time you never get back, but any money that you spend, as long as it's not some absorbent amount of money, you'll be able to get that money back if you consider this to be an investment in yourself, right? Just like when you go to college, you got to pay tuition. Just like, how they say, going into the entertainment business, you got to pay your dues. Getting the education course is no different, right? You come in, but you got to get it from the right people, and don't just give your money to any and everybody. Take your time, research, become familiar. There's a ton of free information out on the internet. And like I said, my course is just one of probably a million different courses that's out there. I just enjoy it because it's my course, right? I just think it's the best because it's for me. But there's a million different courses out there that you can choose from. almost all of them are free. Everybody wants to give you introductory free courses. And the reason being is because if they give you a free course now and they kind of build that rapport with you, the hope is that later on that you'll come in and actually do some business with them, right? It's a sales tactic, right? It is what it is. But the reality is that you need to look at it as coming in from a position of strength to say, hey, let me learn as much as I can from these folks that's knowledgeable about these strategies and about this trading techniques, right? Let me build up my library of knowledge, my database of knowledge, right? Learn as much as I can, right? Because in some cases you can get enough information to be able to go out there and trade on your own and not have to, learn up in, right? I mean, in fact, the stuff I'm giving you now is enough for you to be able to go out there and make a decent living. I mean, hell, think about it. If you're making $400 or $500 a day, right, or at least 2 days out of the week, $1,000 a week, that's $4,000 a month. That's good money, right? If you made $2,000, or let's say you make $500 a day, it's $2,500 a month. I mean, my goodness, man, it's over $10,000 a month. If you can't live off of $10,000 a month, then you have some serious issues that you need some help with, right? So, like I said, just off of this strategy alone that I'm showing you, this right here could be enough if you just master this right here to have a decent lifestyle for yourself, right? That's why I tell you before about the whole not being greedy and don't fall into that trap, because all it's going to do is cause you to be greedy and cause you to overtrade your accounts. Anyway. So let's look at this right here. You know what? We still see this right here. It's gathering even more strength, right? So I'm just gonna say this right here looks like it may be a good trade. All right, Great Britain pound, US dollar. What else we got? Let's look at Great Britain pound, Australian dollar. I'm gonna close this out here. Right, cool. This right here, bam, bam, bam. It looks like it could be. I'm just gonna tell you, folks. This is what I'm thinking. I'm thinking that the Great Britain pound is just gonna be a buy today, and the reason being is because of the sell-off that happened on Friday, right? And I'm thinking that today is gonna be a day where it's gonna just be a rebound, where money's gonna probably come back in because they're gonna look at it as being oversold from Friday because people panicked, and so I think that we could probably do pretty good. So now the main thing is we're looking at these currency pairs. We want to make sure we get something with a tight spread in it, because once again, I don't know how familiar you are with trading currencies, but one of the things that can take away your profit is trading a currency pair that's not very liquid, that has a large gap between the ask, right, and the bid and ask. And so what happens is that gap, which of course is what the broker pockets, right, is big, and then that eats into your potential profit. So what you want to do is try to choose a pair that's pretty liquid, that you think you're going to be able to get a nice move on, and then that way that's more money for you. Okay, tip of the day right there. Let's look at this. So Aussie dollar. Yeah, that looks like he got a little something that he could do. Possibly. Let's look at the CAD. This one right here, and I probably would say no right now. And remember what we talked about earlier, there's some news information that's coming out about the Canadian dollar on the American side. I believe it's tomorrow. Need to go back and double check. If not tomorrow, then definitely next week. I mean, not next week, but definitely Friday. But I think it's tomorrow, actually. But I'm wondering if that's what's kind of holding this one back. So let's see here. Great Britain pound, New Zealand dollar. Yeah, this one's looking like it's moving pretty good, right? So we got a couple that we could trade. Just want to kind of go back a little bit. I'm telling you, I think that for my money, I like this one. Right? I like that one. I like that one. I love that one. All right. Yeah, so we're gonna look to buy this one here. What else we got? So that's the let's see, Great Britain pound, U.S. dollar. So let's go over here. Boom. So oops. Excellent. Let's see, stop loss. Take profit. All right, so we're gonna come back to this one. What else we got? What about this one? Let's see here. Maybe. Let's see here. Let's see if I want a little bit better than that one. Like I said, we don't want that one at all. What about this one? This one maybe. Let's see. Maybe. Let's see if we can do better. Let's see, CH. Ooh, what about this one? Ah, that one is scary. Let's see. You know what? Oh, let's go back to. Oh. Let's see. Let's check something out here. And yeah, you see this tool I'm using right here? It's called your Smart Tool, right? And you see how it comes and it draws the trend lines for me? Like I don't even have to sit there and fumble around with it. Like boom, all I gotta do is find a high and bam, it automatically it does everything else for me, right? I ain't gotta do anything. Love it. Love it, love it, love it, love it, love it. Yeah, I think we're gonna buy this one too. All right. So I got the Great Britain pound and the US dollar. And I got the Great Britain pound. And just, I know you probably can't see me right now doing this, but I'm actually just taking notes as far as what I'm going to purchase here off to the side. Let's try one more. I want to see what the, here we go. Great Britain pound, Japanese yen. And I'm gonna tell you something. I'm not really a fan of trading like the yen pairs, and the reason being is just because the yen's been so manipulated over the years, and you know, it's one of those things where you got like mixed feelings about it. But if it looks good, however, might be able to make an exception to the rule. Huh. This might actually be something. Okay. Oh, and this right here, by the way, is that smart fib, right? So instead of you having to go and take and draw Fibonacci out by hand, right? And then seeing where the extension is, this right here automatically does it for you. And something we'll get into later on, but this is like really cool. Definitely something that helps add to your trading arsenal. So I think what we're gonna try to do, I think we're gonna try to do a three-way, a menage a trois with the currency pairs. I guess if you would. Gonna look at doing the Great Britain pound, US dollar, Great Britain pound, Swiss franc, and Great Britain pound, dollar yen. Typically, and here's something right here, just a little FYI. I mean, all these currency pairs that we're doing against the Great Britain pound right now typically tend to be safe haven currencies, right? So in a time of trouble, people typically go to the US dollar, the Swiss franc, and then also into the Japanese yen. So that could be, you know, definitely a signal that because of what happened on Friday, that folks have poured over into those currencies, and now that the weekend has passed and they feel a little bit better, they want to roll back over into the the British pound. Could be, right? Just a little, you know, just when I happen to notice that, it seems like it's kind of a, you know, coincidence, and don't really believe in coincidence. I think things happen for a reason. So at any rate, we've got about 5 more minutes here, right, before we make that trade. Put some more music back on. I'm gonna do a couple of little more things here, and then yeah, a couple more things here. Put some music on. Let you guys get your trades and stuff, get your stuff together. Remember, we're trading in a demo account right now, not doing any live trading. We got about 3 more weeks before we do the live trading. All right, so I want you to get used to the trading demo account. Like I said, right now we're just doing demos, and we're going to start doing some. You know, we're going to pick up the pace, and we're going to start doing some different type of trading strategies. Really more or less risk management strategies over the next couple of weeks with this demo account, because I really want you to get comfortable with this. Really want you to understand, and I really want you to understand the basics, right? I want you to understand the concepts behind what we're teaching here, okay? So that way, when you're doing it on your own, you're doing it live, right? You got no fears, right? You just be boom, 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 yeah, making that bread. All right, let's see here. Got about 3 more minutes. 3 more minutes before the market closes, and then at that time, we can put these orders in. and get you guys off and out to doing what it is you're gonna be doing for the rest of the day. And just don't mind me. I'm just checking a couple of messages here real quick. If you haven't already, make sure, like I said before, make sure you go to our website, the forextechmagazine.com. Sign up there to get our free course. It's one of many free courses that's out there on the internet, right? Just happen to think ours is the best. Also, too, don't forget to, if you're on Instagram or any of the social medias outlets, please go by, say hi to us, like us, connect with us, follow us. Love to hear from you. We're also on Twitter too. So you can get tips throughout the day, news feeds and everything throughout the day. All right. And then of course we are on Facebook. If you're on Facebook too, love to have you come by. Check out our page. Like us, follow us. All right. Love to hear from you. Got about 2 more minutes. 2 more minutes before we wrap it up. 2 more minutes before we go ahead and put these trades in. All right. Got about a minute now before we make this 4 o'clock candle. All right. I'm gonna go ahead and start putting start laying the groundwork for all this stuff here. Let's see here. Entry. We should just be about where we need to be at. Let's see here. Stop loss. $148,168. 148. Oops, sorry, I'm on the wrong one. See that, folks? That right there was almost a costly mistake. All right, I almost went out here and done this on the daily and not on the hourly like I was supposed to, right? And then I would have cost myself a lot of money, potentially. Let's see how big this thing is. This is... Oh, that's bigger than this. It's about 40. Still only about 50 pips. I just did this is right. SL stop loss. Let's see what stop loss is. 148.452. Take profit TP. close 148. Don't mind me, folks. I am just writing some numbers, getting my positions and everything together. Sit back, enjoy the music. Hopefully, you are trading on your account as well. If you're not, why aren't you? That would be my question to you, my friend. Because you should. You really should. With the demo account, of course, not the real account just yet. Oops. Messed up. All right, perfect. So I got my stop loss. I got my entry. Okay, got my setup. Let's put this order in here. So we're gonna look to buy. All right. Let's see. I always forget I gotta do this. This over here so I can see. I didn't go far enough. There we go. Boom. All right, so we're gonna buy. Not market. Never want to do market. I mean, there's the time when we do market, but I'll tell you about that later. Not now. So our entry is gonna be 941. All right. Stop loss is gonna be 452. And our limit our take profit is going to be 9.50. Yep, place order. Boom. Okay, boom, got that one done. What's the next one we're gonna do? We're gonna do the pound US dollar. All right, perfect. Let's measure this. Okay, so it's another 50 pip type deal. All right, perfect. Not mad about that. one. Oops. 30.632, the entry. Stop loss is going to be stop loss is 1.0270. Then a take profit is going to be okay. One point 31146. All right. Let's see. That's not good. Entry 0.62. That's 270 TP.31146. Let's see here. Pending. Let's see here. Yep, let's see it. Buy. So entry is 130. Let's see. 632. Stops 130. 0. And then 46. All right, place order. Bam, got that one in place. What was the next one we wanted? Was the US dollar. I think the last one we wanted was what, in Swiss franc, right? Yeah. Let's see here. Okay. Perfect. Let's see here. Stop loss is going to be 1.27862. Entry. Let's see. Two, eight, and let's see, it's the last one. Boom, boom, boom. Buy. Entry is 128, 496. Stop loss is gonna be 127, 862. Is that right? Yeah, that's right. So I'm gonna check now again. So 862. That's right. All right, let's finish this now. Let's see here. Pending. Entry is 496. Stop loss is 2. And take profit is 29,017. Oh man, 29,017. Place the order. And that's it, folks. We got all 3 of our trades in, and we're good to go, man. Now we can just sit back and just kind of relax. Ooh. Yeah, so now I'll kind of sit back. Oh, actually, what I gotta do is I need to actually let me adjust this one. I need to adjust. Boom. All right. Boom. I think we got it. All right. Good deal. All right. Perfect. So yeah, just kind of recap what we did. Went into the Great Britain pound, Swiss franc, and we're going to purchase. This right here is our stop loss. So if it goes against us, then this is where we get out at, right? Now the cool thing about this one right here is if the price crosses down into this area, right, before we actually enter into the market, well, there's nothing that's going to happen to us. There's no buy, there's no sell, there's nothing that's going to happen. We're just going to cross in there as we continue to go down, or cross in there and it goes back out. Let me get rid of this because we don't need this now. This was the old one. Not for that one. Don't get rid of that. All right. This right here is our entry order, right? So once again, we're trying to work with momentum. This is the reason why we didn't just do a market order. If we just did a market order, we'd be taking a loss right about now, hoping that this thing is going to come back. And then we'd have our stop loss here, hoping that this does not touch our stop loss. And then what we're trying to do is we're trying to adjust this down a little bit more, a little bit farther as it comes down. And then eventually we do this enough time, we blow our account up. We won't have anything left to spend, okay? And then of course here, this right here is our take profit, right? So once again, the way this play is supposed to work is that, once we get into the trade, eventually at some point in time throughout the day, we should hit this marker here, and there should be money in our bank account, right? And we don't have to do anything but just, spend, 20 minutes, from start to finish, from 4 o'clock to now. It's 20 minutes setting these trades. It took me probably another 10 or 15 minutes just to kind of go in and identify these trades. You should be moving with the same type of efficiency, if not better. If you're not, once again, something we can kind of help you with, okay? Same thing here. This is my stop loss. This is our entry order, and this is our take profit, right? And we'll see if it hits. This is for the Great Britain pound US dollar. I feel fairly confident, though, with all of these that we should actually be profitable with these today. Of course, I said the same thing on Friday, and didn't quite work out the way I planned with one of them. One of them it did. Same thing here. Our exit, our entry, and where we hope to take profit from. This right here is kind of a big stretch when you start looking at it because it's been trading kind of consolidated for a while. I don't know if it actually will, but we'll see, right? And if it does, more power to us. If it doesn't, then, probably around about 2 o'clock, today or so, I'll just exit out of this thing manually. But we'll see. We'll have some fun with it, okay? Anyway, guys, thanks for hanging out with me this morning. I appreciate it, right? If you got any questions, got any thoughts, please leave us comments. I'd love to hear from you. Please, email or direct message me. Either way you go, I'll try to answer as many as I can. Always like to leave on a positive note. This is a quote from Les Brown. He says that always shoot for the moon, because if you don't make it, at least you'll be amongst the stars. So I'll leave you with that little bit of knowledge right there. All right. Anyway, guys, take care. Happy trading, and I hope you guys have a great, safe rest of your day. See you tomorrow. Take care.